Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, June 15th, 2018. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we can definitely see that the ES has been in an upward path toward the upper end of the recent resistance range, which is anywhere between 2791, which we've hit, into as high as this recent high just above 2800. So we've gotten into that zone you can see here. I mentioned before that typically speaking, you'd like to take out the recent high before we turn back down, or should we turn back down. So the recent high is here. There is an unfinished FOMC key level, and that one is from January 31st. Unfinished meaning that when that FOMC level was created, price ran away from it and never came back to retest it, and that's very, very rare. So usually price will come back to retest it at some point, even if it is months down the road. So again, we could still see another round of strength perhaps into that level to take out this high before perhaps we see exhaustion and maybe a return back to 2703. Overall, this market has been quite bullish. It's been very difficult to sell for long stretches of time. We have pulled back somewhat here, but you can see quickly over the last 2 days when price has gotten below the 8-period moving average, we've seen buy programs come in, push this thing back up a little bit, and now we're still stuck in a range that we've been in for the last 6 days or so. So again, not a whole lot of action, but buying dips still the best way to go until proven otherwise. We could see one more pullback that gets us into 28.29, followed by perhaps one more failure that results in either some sideways or maybe some compression. So for the most part, we might have another move in us. Let's see if the market can continue to work higher. But this is the moderate case. Over here, if you look at the NQ, this is the more bullish case right now, with price breaking through highs, holding at these highs. You can see the previous session here. Let's widen it up a little bit. Right in here, you can see the previous session. 2 days ago, we had a rejection tail, and then the previous session we had a failed new low, and then pushed through the rejection day mid, went through this high, and now price is trying to hold above the previous high for continuation. So very bullish sequence right there as this thing continues to develop. And the idea with this one is that we will likely continue higher until we find rejection, which could be soon. Rejection could be soon, and what it would look like would be something like this, for example, or maybe something like this. It could look like something like this, right? It could also look like that. Those are the major forms of rejection, and it's formed every single one of them on these highs for the most part. Basically an outside reversal where it rejects highs and just screams lower running stops. It could build a range up there for 5-7 days or more and then fail. It could have a quick V-top type of reversal where it has a big day up like yesterday, and then today would be a huge day down, taking out running stops. Or it could be a rejection tail, right? So there's many different ways we can do this, but now that we are above this high right here, it would take failing back below that level to start a bearish sequence back towards the mid. Otherwise, we're still trending up right now. This market is extremely bullish. You don't want to sell a top right now. Instead, buying pullbacks makes more sense as this thing continues to climb, perhaps into the next key target above, which is 74.40. All right, taking a look right now at the bearish case. This is the YM. You can see this is a bit more bearish than the ES or the NQ. The previous session, bit of a rejection type of tail here after a stop run day type of day where prices began to push the stops and close below those lows. Rejection day, pullback day, and then now you have a continuation downward. So this is much, much more bearish here than the ES or the NQ. However, we are coming back to retest a very important pivot. That's that 24,886 zone. That is the midpoint of this larger key range right here. And so for the first time in a long time, we've gotten a transition back above that level. So any retest of that level should stay bid until proven otherwise for a shot at pushing to the next resistance up. So if all these markets have one more leg up, then perhaps this could be a buy. We are also below the 8-period moving average. Again, a great moving average to defend when there's a directional market, as this is right now, currently headed up. We could be looking at a little bit more pullback, followed by perhaps a continuation. From the June lows, we have not yet reached our primary target zone, so we still have a little bit more upside there. So again, we could be looking at a buy opportunity here despite the short-term selling pressure. Any failure to hold 24,886 would be significant, and again would open up downside levels much lower. Alright, taking a look at crude. Here's a look at crude oil. This one right here, pulling back a little bit here. It has been kind of sneakily pushing higher, a little bit of a channel there, up again. The key level to watch is this blue dotted line. That is the previous month's close. If price can reestablish back above that level, there could be a squeeze coming, at least back to the mid again, to kind of give us a key range. So overall, this thing could be looking at kind of a push up at some point here that could be a little bit more significant than what we're seeing. But for the most part, we're likely going to stay within these boundaries for a while, develop in this range, and then we could be looking at further movement down the road outside this range. So keep an eye on this one. Also, if you take a look at gold with the failed move yesterday, so it failed to hold above 1310, again shows the strength off that level. 1290, 1295 still the big level to watch down below. 1295 is being absorbed. 1290 would be the break point. So again, this one you just have to be very careful with right now. No decision on direction. We have two very good levels. We have 1300 that the market is straddling, and again we could be looking at a big move one way or another, but direction right now is very difficult to call. Again, I would still say it has an upward bias, but yesterday it had a chance to really run with the ball, and the bulls fumbled. So again, back into 1300 we go, and again that's the level to continue to watch, but I'd be very cautious right now and continue to watch this one for signs of directional bias at some point, because expansion could be significant. Okay, that is it for now. We will see how this plays out heading into the rest of the session. Good luck and trade well.